Hello and welcome to Crux Investor. We caught up earlier today with Wayne Heili. He's the CEO at Peninsula Energy, ASX-listed uranium junior with assets in Wyoming, US of A. He talks to us about the press release they put out last month with regards to needing to do further enhancement and optimization of the test work that they've been doing in the field. We also get his insight as a buyer with long-term contracts of other companies buying pounds in the market and what that's going to do in terms of mopping up mobile inventory, what it may do to price, will it retrench or not, and perhaps how the utilities are viewing all of this. So fascinating conversation, lots more discussed too on the macro front. cruxinvestor.com/club. We can also find detailed company reports and analysis. We've got commentary from experts from around the world talking about a number of different companies and commodities, including our weekly uranium show now in its 51st week. Intelligent insight there if you're interested in uranium. We've also got training courses on there to help you with your diligence process. We've got summaries of all of our interviews to save you some time because we know you're busy people. But most interestingly, you may like to be talking to and joining in with a thriving group of investors sharing their thoughts and ideas with each other in a nice, friendly and safe environment, free from judgment, trolling and abuse. If that sounds nice to you, go and join them at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like, it'd be appreciated. If your thoughts below, we get back to everyone. And if you want to see precisely what we talked to Wayne about today, do take a look in the description below. Wayne, how are you, sir?
Great, Matt. It's nice to be back on your program.
Well, thanks for coming back. I was keen to get you on because there's been a lot of companies going out and raising capital to go and buy pounds in the market, amongst other things. And you guys buy and sell pounds every day of the week. So I'm intrigued to get your view on that. But first of all, how are you? Have you been jabbed yet?
I have. I've gotten my 2 jabs. I feel good going out into society. I don't feel like I'm going to die because I did so. It's a strange new day. Nice. I feel good. Thank you.
That's nice. I think that's what you need as a bare minimum every time you leave the house. Yeah, that's good.
Every time you leave the house, you should feel good about it.
Yeah.
And I'd encourage anybody who hasn't considered getting a vaccination to do so. It's really changed my outlook on. I'm ready to go. I want to go back out and engage with investors. I want to go back out and engage with utilities and fuel buyers and do the business as it used to be done.
Good on you. I'm 50% of the way there. I had mine. It floored me for about 48 hours, but here I am.
I'm sorry to hear that. My 2 went flawlessly, and other than a little soreness in the arm from the needle, just flawlessly.
It's not a competition, Wayne, but you won. But you won.
No, I'm sorry to hear that, Matt. It's
Look, Ray, better talk uranium. I'm much more comfortable with that. Well, like I say, I'm keen to have a conversation around what's been going on in the market, but why don't you give people, perhaps you haven't heard the story before, just that 1-minute overview, and I'll pick it up with some questions from there.
Happy to do that. Thanks, Matt. Look, Peninsula is offering a unique opportunity for investment in the uranium space. We're a company that's a near-term producer, but we also have contracts, long-term contracts for the sale of uranium. So as you pointed out, we're in the market on a regular basis, buying and selling uranium as needed to work in our contracts. We have revenues that support our company on an ongoing basis. And we've recently announced some information about that, which we could talk about. We also have U.S. market exposure, which is really important. We're a U.S. producer. Our projects are in Wyoming. The Lance project is our flagship property there. Operationally, we've maintained a strong team. We have a very strong operational and technical team. We're continuing to do a field demonstration to prove up some new approaches to mining in-situ recovery here in the U.S., but for our project specifically. There's a lot going on at Peninsula. We have great opportunities.
Okay, we'll talking of field work and pilot testing, etc. You've had a bit of a setback recently, haven't you? That's what I read.
Well, I think not so much. Look. Our project, our field demonstration was working, and we know it was working, but we knew we could do better. And we shared an update, that said, here's some areas where we could do better. And we went on from there. We've identified some solutions. we've implemented those solutions, and those solutions are yielding good results for us. We'll be back to the market with a further update on the field demonstration in the very near future.
Okay, so you feel that the tweaks, the optimizations that you have made over the past few weeks are going to give you the results that you want?
Yes. They're already showing trends. We like we said, we knew we could do better. We found ways to improve upon what we were doing, and those new changes, the alternative approaches, are yielding good results.
Okay, so it's not a setback. It's just part of the process that you're going through. You'll let us know what in the next. Well, when can we expect some?
Yeah, we're preparing some information. When it's ready for release, we'll share it. It's not too far off.
Okay, fine. Also noticed that it was kind of why I called, because I saw the headline. I'm like, well, why are you telling us this? Because we know that you have contracts. We know that you buy uranium in the marketplace, and you've indicated previously that you would expect in 2021 $6 to $8 million of net cash margin contribution to the bottom line. So why did you put that announcement out? Is it just because everyone else was?
Well, no, actually, because we went and covered our deliveries for 2022. In the past, we'd shared information about having 2021 covered. We elected to go into the market while the price was right. It's significantly lower than our expected cost of production. It's the way that we can benefit best from our assets, which are our contract book. To purchase material in the market on the forward curve, if you will, for future deliveries. And we just wanted the market to know that we have done that we have secured revenues of $7 to $9 million for 2022. I've told you before, we're not a company that should need to go to the market to keep the lights on. And this information, which we shared now, that in 2021 we have net revenues of $6 to $8 million, and in 2022 we have net revenues of $7 to $9 million, is the confirmation of that thought process.
Okay, I noticed that obviously if I look into the market, so there's going to be a bit of macro conversation here because I'm intrigued at your thoughts. You've been in the industry a long time. You've got some good views on it. If I look at the equities for junior uranium stocks, companies have seen doubling and trebling of price over the last 4 months with very little effort on their part. Nothing's really changed. Not a lot of exploration or development. The market's done the heavy lifting for you guys. Okay, but do you think that you as a company were affected by that announcement around the field results? Because you came off a little bit. You've recovered also a little bit, but you definitely came off.
Yeah, that announcement was not fully understood, and yes, we need to bring some additional information to market. We did come off following that announcement. Fair enough, and we will bring some clarity to the market in the very near future.
Okay. Let's talk about one of the other things which is going around, and this is where your area of expertise is, it seems, is some companies, we're talking about Denison initially, and then a bunch of kind of copycats and UEC in Boston. I think even Encore going out, raising some capital, predominantly for the purpose of buying pounds in the market. I think the market sentiment was, great, they're going to sweep up all of the mobile inventory that's out there, and it's going to drive the price up. And this is the beginning of the rally. So what was your take on why these companies were doing it and what the effect is for them?
Well, some companies are further away from production than others. And their share price is a proxy of the price of uranium. So it makes very little difference if they're invested in uranium and a proxy for the price of uranium, or not invested in uranium and a proxy for the price of uranium. I think there were investors out there encouraging them to go take a physical position and drive the price higher. And that happened. Earlier this year, we had very little demand in the market. The spot market was weak, and it fell from 30 to the mid 20s, $27 price range. The demand that these producer developer companies have brought into the market, quickly sponged up the material that was available in the 20s price range, and it pushed the prices up into the $30 to $31 price range. Depending on who you talk to today, the spot price is about $31. So what we did was, or what they did with that buying was, remove the cheapest pounds. But there will be more pounds that come into the market as the price rises. We found that while we were trying to secure material for our long-term contract deliveries, that 2022 material that we just talked about, material that was priced uncompetitively, one day became competitive and available the next day. The material was there at, so let's just say, material's there at $32. It's just that nobody's willing to pay it. So the spot price is what a person's willing to pay for material, not what a person's willing to sell material for.
But these utility buyers, you're dealing with them. You buy and sell. That's part of what you do here. As I've said to you in the past, I don't necessarily want to buy into an arbitrage situation. I want to buy into a uranium producer. But do you think those utilities will have looked at some of the companies who've raised this capital, who, for the sole purpose of buying pounds in the market, as I'm not going to call it, well, it's a little bit, and with banking term we use here is dumb money, basically, sort of making decisions or creating actions out of a situation which they don't really have much control. They've gone and raised the money. The expectation is you've got to go and buy pounds, and they've gone and bought pounds. By the way, it's seemingly quite easily and very quickly, which is also, well, I say worryingly because I'm like, well, hang on, I thought that we were in a situation where there was a massive supply deficit. So 2 questions. One, why were they able to buy pounds so quickly and easily? And do you think that they perhaps have overpaid?
Yeah.
Do you think we can expect to see it come back down to 30 now that
it's very easy to contemplate a retracement in the price when the buying activity settles down and goes back to where we were in the earlier part of the years, where there was very little volume in the market. It could retrace, but it might not. And the reason why it might not and it shouldn't is because the material that was available at those lower prices has been removed from the market. And it's put in the hands of folks who are aiming to make some money on the transaction in the future. These guys didn't buy these pounds on speculation, assuming that they were going to sell them later at a loss. They assumed that because they're standing in their hands and they've had investor support to raise that money, that they can hold those pounds until the market's healthier. So you have to consider that pounds that were available at a lower price have been removed from the market for the time being.
Well, I think they've been removed from the market for this intervening period, whilst these guys needed to spend their money, and they were less price sensitive than perhaps a utility might be, who's sitting there, well, I've got 2.5 years worth of inventory here. I know how to go out and buy pounds in the market. I'll let these guys do their thing. I'll wait for the price to retrench, and then maybe I'll keep popping in there for the some of these spot purchases. I mean, is there a little bit of that? Is it basic demand and supply?
Yeah. It's going to be really easy to buy pounds. I mean, anybody with money can buy pounds, and
Okay.
There's a few other qualifications, but if you have money and you want to go out and buy pounds, there's pounds out there at or near the spot price that can be got, and the harder thing is to sell them at a profit. And that's one of the things that Peninsula is doing. What's differentiating our buying recently from others is that we're buying them with a purpose. That purpose is to sell them later at a price that we know is going to be higher than what we bought them at.
You know or hope that they're going to be higher. You don't know when, but you've got contracts. You're in a different position. You've got contracts at fixed prices.
We know we have contracts at fixed prices. We do know
exactly
that we will be selling these pounds. We purchased them with a purpose, and we know what that purpose is, and we know what we'll be selling them for.
But do you agree, or do you like the positioning of some of these companies going, look, we're going to raise capital from you, but there's good news. We're going to buy into an appreciating asset. the price will recover. It will be more than we pay now. So in a way, it's not kind of cash on cash. It's not cash for equity. It's cash in an investment, which has some, let's say, arbitrage component to it. Do you think it was wise for Denison? I get, because they already store pounds. They do that for a living. They know what they're doing. Some of the other companies, not so much. It's not what they've done, not what they do. But as I said to you earlier, it seemed very easy for them to go and buy pounds in the market at a price. I think maybe it's slightly less price sensitive than most. Do you think that it makes sense for more companies to maybe try doing this too? Can you see more people doing it?
Look, the consensus view is that the uranium price today is too low and it has to go up. They're taking a position on that view. You and I have just been discussing that that's not necessarily so. The price can retreat, and investors can lose money just as easily as they can make money on that play. And there are physical uranium funds that fill that role in the market. Do we have to have producers filling that role too? I don't foresee Peninsula moving into that role. But we may. Who knows? I don't foresee it. I think that's good for some, and others don't really need to have that exposure to hold physical uranium. If an investor came to me and said, I got $20 million and I'd like you to buy some uranium with it, we'll have to decide if we want to issue additional equity to do so. It's not an easy choice because it's a bet on the market's direction. And, I think we all agree. The consensus view is a very strong one, and it's very well thought out that the price of uranium should go up. But there are risks.
There are risks, but with people like UPC and Yellowcake, in fact, Yellowcake obviously taking up their option with the Kazatomprom recently. Left it to the last moment, but they were able to raise the capital and go back. Why aren't they doing more of that? Why aren't they driving this? I guess they don't necessarily want the exposure themselves, but they could go and buy more pounds in the market.
That's right. I don't know why. That's not in my realm. I think you're going to have to address that with them, Matt, someday.
I will address it with them someday if they'll come back on. Okay. But it's definitely interesting times from that perspective. I think people expected more to change, more to happen. They expected utilities to get nervous and start buying themselves. But is that your expectation? What do you know? What can you tell us?
My thinking on the utilities is yes, they have their needs covered for the near term, and I think they're finding more favor with the midterm market now than they know that they can pick up material at the spot market at this price. The price is there for them and at their choosing any time. A significant amount of buying in the spot market will push the spot market price up. We just saw that happen. It wasn't the utilities, but the utilities in a rising price market are more likely to take a step back. And I think the next move by the utilities is to use the midterm market, the 3 to 5 years out to fill future needs. So the midterm market tends to be spot price escalated. So that's where we'll see the pricing action when the utilities come back to the market. I think they're favoring the midterm market over the longer term market. So it's really good to have some long-term contracts that are not falling off in the near term. That's it. The utilities have a lot of options. They can play in the spot, they can play in the mid, they can play in the long term, and they're making good decisions. Security of supply is an issue; it's a concern. But as long as material is available at known prices, it's not a huge concern for them. So
Do you think the buying behavior of utilities will have changed? We've seen in the past that most they like term contracts and need certainty around pricing, but they like that in a rising market in a fast rising market. In a volatile situation like we've seen over the, because we got up to, what did we get, $34.50, I think, before Christmas, and we've seen a bit of movement. Do you think that they will change their buying behavior in the short term and stick with spot because they're able to sort of clean up and buy at prices which are very attractive to them?
Yeah, and don't be fooled. $30 is still a very attractive price. So they can. It's better than the term price, which is $36.50, $37, right? $30 is a lot better. And yeah, as long as you could pick up material at spot, discretionarily, that's decent strategy. But at the end of the day, it is true. The utilities are going to look for reliable suppliers, reliable producers. In my career, I've never had a utility come to me and say, how much inventory do you have to sell to me in a long-term contract? That doesn't happen. They want to know how much will you be able to produce for it, because they know that ultimately production drives supply availability, and you have to have an equal amount of production to demand. Right now, this is an inventory-driven market and not a production-driven market, but I think we'll see this market shift from where we are today to a production-driven market over time.
Okay, but famously, John Borshoff with Paladin back in the day when life was good was spot. I'm going to be a spot guy, and that was ultimately contributory towards the downfall because they didn't have those prices fixed or baked in to their economics. So there is and I respect John. I think he's called the market, knows the market. He's extremely solid individual and someone that you should listen to. But that was perhaps a moment that he got wrong. So there is an intellectual exercise or an intellectual hypothesis that says that maybe this spot buying could continue perhaps longer than we need, and possibly still, if people get used to it, maybe institutions can get used to it. Maybe institutions will fund projects without these long-term contracts, as long as there's a sort of established buying process, route to market, which, certainly when we were involved in banking, there's no way we'd do it without some long-term contracts in place for, certain volumes, right? But could you ever imagine or countenance a scenario where perhaps the market does adjust in the way that maybe utilities are looking at the market now?
It's going to be difficult to keep the human capital side of the mining along, because the mining companies need the long-term contracts to secure capital. The producers need that. And we've been in a prolonged down market where the spot price and the midterm pricing does not match the cost of production. So something's got to give. Either the miners go away, and you're left with just a small handful of choices of suppliers, or you support a better priced market and long-term contracting to ensure a diversity of supply.
Okay. And the reason I asked the question like that is because, I think there are people with a view that, spot price is here to stay for a little bit longer, and it's not moving at the rate that it needs to, and that perhaps companies could get finance without long-term contracts or term contracts. You would argue that's absolutely cannot happen. No one's going to fund a company on the basis of what's happening in the spot market at the moment. Because if we look back at the spot market over the last few years, there's no positive trend which says that the recovery will be there at the levels that are going to be needed to be able to make money for the economics to stack up.
And I think that's what's interesting about today's market is that, like, if you go to a conventional, debt market to get financing, you definitely need long-term contracts. But there's definitely also a lot of investor enthusiasm for the junior uranium mining space right now. And the junior uranium miners who are using physical uranium as an investment thesis today are raising the capital that they may need in the future to finance their projects, to build their projects. But they're storing that cash, that asset, in physical uranium, and there's risk with that. We'll find out in the long term, if they'll be rewarded for that or not. I can't say, but I would hope that the market thesis that the price of uranium has to go up is correct.
Yeah. I guess that's the bit that most commentators, I'm sure, just the timing of this, which suggests that the longer it runs like this, the quicker the kind of accelerated rate at which it does recover. It will go very sharp when it goes. To your point, there's a lot of people looking at the uranium space at the moment, and I've spoken to a few CEOs this week who've got the view that some of the less patient investors, if they see this spot price trend carrying on this year, will get bored and move on to other things, in which case we could expect, say, a retrenchment in uranium equities too. What's your thought on that?
It's possible. Yeah. Uranium is a long cycle commodity. We've had a long down cycle, and we're due for an up cycle. Last year, there was the return of enthusiasm to the uranium space, really, particularly in the fourth quarter, but the second half and moving forward. There's been some long-term uranium bulls who've supported us, for a much longer period of time. And there's absolutely a much larger audience of general investors with their eye on uranium today because of the potential for uranium to pick up and move. It's pushed the equities far faster and far higher than the price should suggest. And so, I don't know how long that money will hang on. The uranium thesis isn't going to go away. The price of uranium does need to go up for producers to come back into production and to generate sufficient supply for the long-term demand in the market. As long as we're supply deficit, producing less than we're consuming, we're moving towards that day every day.
Okay. Well, look, let's finish on this, because I want to come back to what you guys are doing. I mean, so remind me, CapEx, how many pounds? Because where I want to go is U.S. uranium reserve. You're a U.S. asset that still hasn't been resolved. So remind us again, sort of what your startup CapEx is, timing, how many pounds.
Right. Well, thanks for asking about that. Peninsula is in a good position with startup capital and with startup timing. We're at a point where we will make an investment decision to return our project to production. And when we do, we're faced with a $6 million investment in converting our project from the alkaline in-situ recovery facility that it is to a low pH in-situ recovery facility that we inspire to have. We want to do that because we know that we'll generate lower operating costs and higher productivity rates using the low pH method. It is the best way to produce uranium globally. It generates the lowest costs, and we're going there as a company. So $6 million to do that in about 6 months of time from that investment decision to put the project back into production. Those numbers haven't changed in a long time for us. We've been looking at them. We've done a lot of testing, but we continue to come to those numbers. They're still good. We will invest in some new well fields, to sustain our production rate into the future and bring it up to our full capacity at the facility. We're looking at another $12 to $15 million of new well field investment. So to be fair, we can start production for $6 million, but we will look for a little additional capital to invest before we have production returns that we can sell. So some capital to sustain us, to bring new units into the mine, and to improve to bring our production to capacity. You're probably looking at $20 million total.
And so, how many pounds are we talking about?
Well, a typical new well field is going to carry 1.5 million pounds, and our production rate at our facility is about 1 million pounds a year when we're at capacity, 1.1 million pounds per year. So, we'll look to build some new well fields. We have a 52 million pound total resource at the project. It's not a deficiency of pounds. We just need to, build new well fields and address them and get get moving in the production scenario.
Okay, and so what are you hearing about the U.S. Uranium Reserve Fund? It looks like there's not been much movement in that.
Well, really, to the public's eye, there hasn't been much movement in it. But the U.S. government is still very supportive of nuclear energy. We're hearing good things from the Biden administration about their support for nuclear as a part of a clean and green energy economy. There also is great support in the Biden administration and throughout the government for reestablishing the U.S. infrastructure to produce critical minerals, of which uranium is one of. So last year, when we had the $75 million funding approved for the uranium reserve, that put the onus on to the Department of Energy to establish that program. They're working to establish that program. Of course, the change of administration at the beginning of this year meant that there was some leadership voids. There was some time needed to refill the leadership positions in the various departments before those moved forward. And that really explains why not much has happened in the first quarter of this year. But the program is alive and well. The program will happen, and we will see the Department of Energy moving forward with establishing the buying program to bring the uranium reserve to reality. And I think that, there's still a very good understanding that while the first year funding was $75 million, that future funding should be on the order of $150 million a year. So more uranium purchasing in the future at a higher level to get support for the production of uranium, to maintain the infrastructure in the United States of production, conversion, and enrichment of uranium.
Okay, I mean, we talked in the past about this sort of scant amount of detail around how that could work and, how the numbers actually play out. But you, as an ASX company with your US-based asset, would be looking to insert yourself into whatever shape or form that manifests itself.
Absolutely. We have contracts, but we certainly are always seeking more contracts to increase our production profile and opportunities to sell uranium at appropriate prices. We believe the U.S. government uranium reserve will provide that opportunity for us. We're certainly qualified as a U.S.-focused uranium producer to participate in that program. And to the fullest extent that we can, we will participate.
Okay, brilliant. Wayne, look, appreciate the catch up today. And also thank you very much for the insight around, how the market's working with regards to buying of these new pounds by these new players in the buying space. Stay in touch. Let us know how you get on with the results. And we should expect to see those in the next few weeks.
Yes, sir. Yeah. We're working on preparing some information for the public, that will, I think, come as a relief, come as an improved understanding of why does a company do a test? How do they learn? How do they respond? How good are you at that stuff? We're working there, and you'll see the release in the coming weeks. So look forward to maybe visiting with you again soon.